Hello, guys. I see that the first people are entering the webinar room. Welcome. Uh, can you guys hear me? There's always good to do a little mic check at the beginning. You can there's a chat function in case you want to ask me a question or. Oh, hi. Good morning, Aaron. Nice for you to join, Nilesh. Okay, good. You can hear me. Perfect. I see people are slowly dripping in. We got 50 people live at the moment. Couple minutes to see if more people will join. In the meantime, can you guys tell me where you're from? It's always nice for me to see where everyone's from. It's usually a fairly international audience. Usually many people from the States and also more and more people from India. So where are you guys from? Germany. Oh, so we got some Europeans here. That's good. I'm also from Europe, so it's a bit late over here. India, Canada, South America, California. Might go there soon. Let's go. India. Cool. Very international audience. I think so. Welcome to the How to Analyze Stocks the Fast Way webinar. My name is Nick. I'm the founder of Value Spreadsheet, and I'm very excited that you're here today with me. So why are we here? Well, I will show you how you can analyze stocks in a very fast way, and I'll even let you guys shout out some companies and ticker symbols that I will then analyze for you on the spot. And at the end of this webinar, you will know exactly how to analyze stocks quickly and also calculate their intrinsic value, which is something that, yeah, is sort of like a cornerstone of value investing. I am from Amsterdam, and in the Netherlands. It's a beautiful city, and English is not my native language, so please apologies if I ruin some grammar here and there. And I do want to make this webinar interactive. That's why I just asked you about where you're from, because then I can actually tailor the content to what you actually want to know, because otherwise I'm just brabbling on and maybe you have some questions you want to ask me. So feel free. And yeah, in the coming hour, I'll teach you as much as possible. And after that, I'll show you how you can get more help if you wish. And there will be plenty of room for questions during the webinar. But for now, yeah, let's get started. I do see that a lot of people are still saying where they're from, like Tom from Finland, Canada, California, more India. Cool. Okay, so let's go to the first page. As you will all know, this is Warren Buffett, obviously. He's the world's greatest investor of all time and the third richest man in the world, last time I checked. And what he said is, whether we're talking about stocks or stocks, I like buying quality merchandise when it's marked down. And the reason I picked this quote out of all the great quotes that he made is because this small sentence explains his strategy in a nutshell. So I have been studying the strategies of Benjamin Graham, Warren Buffett, Monish Pabrai, Philip Fisher, John Templeton, and many other legendary investors for years now. And even though the details of their strategies differ, they all base their decisions on the following two key questions. One, how well is the business performing? And two, how much is the business worth? So this sort of sums up their entire strategy. And it's a strategy that all of these investing grades employ. And it's all based on finding the answers to these two key questions. So to answer the first question, how do you tell how well a business is performing, actually? Well, to show you, So yeah, how well is the business performing? To answer that, you look at the financial figures, the financial statements. And I will show you some nice resources where you can find that information and where you can actually find all the information you need to analyze a company and how it's performing. So give me 1 sec. I'll switch windows. I'll open a new one. And I'll say, okay, let me just switch to a different screen for you guys. Share screen. Application share. There we go. Yeah, let me open a website for you. Wait, let me see. Let me see. So we go to Guru. Sorry, this takes longer than I expected. Someone walked in, so I had to like tell him to not disturb. So Gurufocus.com is the first one I want to show you. It's an amazing website with a lot of financial information. Let me type it out for you as well in the chat so you can actually see the websites I'm visiting. Gurufocus.com. What I love about this one is that it has so much financial data. So for example, if I type in Apple, the Apple ticker, and I'll go to 15-year financials. Oh, you always get this freaking pop-up. It's driving me crazy. If you want to take it away, you just have to register for an account. So what you see here is a lot of financial data, especially here on the side. They blocked out most of it. You need a paid account to actually see them, but still, you got tons of ratios, return on equity, return on assets. You got income statements, balance sheets, a lot of good stuff. And especially the top part is interesting with the financial ratios. They're very useful. So this is one great source. Another one I like to go to is finance.google.com. I'll type it out for you again. Finance.google.com. The great thing about this website is that it has a stock screener that is pretty good. So if on the left side you see stock screener, you now see a list of 33,000 companies. You can then like say, I look for companies with a minimum market cap of 145 million or whatever you want, and then it filters them out for you. So that's a great way to find companies. You can also add some criteria here. For example, if you want to filter on the current ratio or other ratios, we'll go into that more later on. But yeah, the cool thing is that here as well, if you type in Apple, they have financials down here. And here you get 4 years worth of financial statement data. And let me see if it loads. Yeah, so it's now, by default, it's filtered on quarterly data. You can also select annual data, income statement, balance sheet, and cash flow. So here you got all the data you need to actually analyze a stock and how well it's performing. Let me just show you another cool one. It's called Jitta, jitta.com. It's a less known website, but I still like it because it's primarily focused on value investing. Let me see. So this is how they analyze their stocks. You can see the Jitta score, which is like their analysis of how well the business is performing. And then they have this little line that shows you what the value, they call the Jitta line. It's the fair value of a company or the intrinsic value of a company. So very interesting website. Good to get some ideas on which stocks to analyze. Another one I like is this one, Fool.com. It's a strange name, for sure. The Motley Fool is what it's called. They have a lot of paid investment newsletters. they haven't been able to trick me yet to buy one of the subscriptions, but what I do like is community and then caps. So what this is sort of like a stock picking game almost, but you end up with, let's see if I type in Apple here. I don't think I'm logged in at the moment. Let me just quickly try to log in. Yeah, okay, try it again. Apple. Oh, wow, what's happening here? Close. Wrong search box, apparently. Not entirely. Oh, look, here I can see financial ratios. I think they just changed their layout. That's what it is. I haven't seen this new website yet. I haven't been here in a while. Yeah, so you can see the financial ratios. Let me see. They always had a section where people could actually say what they think about the company, which is interesting because on most websites you can only find the financial figures, but it's also interesting to hear what other people think about the stock. And well, I'll have to come back to this one. I'm sorry, guys. They changed the layout, and I'm not entirely sure where to find it now. Let's move on. Another good one is Yahoo Finance. So that is finance.yahoo.com. Finance.yahoo.com. We got a big picture of Donald Trump up in here. Love it. Not really, but okay. Financials. Again, you find a lot of financial figures here. They have updated their layout as well. Looks a lot sleeker. Statistics. So here you got more of the, the ratios and margins. Very interesting figures. So yeah, so these are a couple, just to show you, a couple of resources where you can find the data you need to start analyzing a company and trying to answer that first question, like how well is the business performing? So when I first learned about value investing many years ago, I understood that, these financial figures had to be analyzed, and this has to be done in a systematic way, because as you can tell, if I go to the financials page, this is a crap ton of figures, and how you don't have a one view where you see, okay, this company is doing great. There's not one thing you have to look at. There's a lot of things you have to look at, and filling in all these figures into an Excel spreadsheet is what I did at first. So I had a couple of different spreadsheets. At some point I had 9 spreadsheets, Excel spreadsheets, to analyze stocks, and it took me several hours to retrieve and fill in all the financial data needed to analyze one stock. And it wasn't only boring and time consuming, but it was also I was also making a lot of mistakes when entering the data, because is it a million? Is it a billion? Some websites show it in thousands, like here. It says in thousands. Other ones show it in millions. It's very easy to make a mistake. Oh, I do see that Vipul and Justo said 2 other great resources, Morningstar and finviz.com. Those are great indeed. So yeah, I was making mistakes when entering this data. Plus, I had to sometimes fill in the same data in multiple spreadsheets. So the first step I took to resolve this was actually to merge all the spreadsheets together into one. So I no longer had to fill in the data several times. And then I realized how amazing it would be if I could simply draw in all the required financial statement data into the spreadsheet automatically. And after a couple of weeks of programming, I came up with the very first version of Value Spreadsheet. And let me just quickly see if I can go back to to the other screen. There we go. Yep, we're back. So yeah, I came up with Value Spreadsheet, and which is a tool which helps you to analyze stocks quickly. And we're now several versions later, and Value Spreadsheet has really evolved into a powerful investing tool that really anyone can use on any device with an internet connection, because it's powered by Google Documents. And yeah, I would actually like to show you how the premium value spreadsheet helps me to analyze stocks in seconds. And I will first run you through the most important features, and then you guys can start shouting out ticker symbols, and I'll analyze them for you on the spot. So give me 1 second again to, well, that's my cue. It's gonna open it right here. Okay, there it is. As you can see, it's, oops, gotta make it a bit bigger. Yeah, that's better. Okay, so this is the value spreadsheet. This is the dashboard. You see, and on the bottom there's a lot of different tabs. I'll go through them one by one, but for now, let's just go through the main features quickly. So you see, I just pressed the big login button. It says you can now use the spreadsheet. So we have filled in the ticker symbol for Bed Bath & Beyond. And what you see here is actually the answer to the two major questions. First, how well is the business performing? That is what this score is showing. I'll explain it a bit more in detail later. And then the second question was, if you remember, how much is a business worth? So that is answered here. We have 3 intrinsic value models. They will all give different valuations because valuing a company is more art than science, really. So you don't really, there's no perfect way to do it. That's why I included 3, so you can have a decent ballpark estimate of where the value is. And like Charlie Munger, Warren Buffett's business partner, had a great quote about this. He said, "It's better to be roughly right than precisely wrong." So what we try to aim for with the intrinsic value is really a broad ballpark figure of where the value is at, and then you can compare that value to the current price. And if the price is a lot lower than the current value, it might be an interesting investment if it's also a good company with a good score. You know, so that's the basic premise of value investing. You look for a company which is performing very well, so with above average profitability, below average debt. And then the second question is, once you find a great company, is it actually cheap at the moment? And that is what you answer by looking at the intrinsic value estimates. So the score, what is it made up of? As you can see below, we see fundamentals. So different fundamental variables like the return on equity, debt to equity, net profit margin, PE ratio, all kinds of measurements for how well a business is doing. I won't go into detail about all of them. Like there's a lot of information in my video course, and there's also a lot of information for free on my website and my blog. You probably read some stuff already. So yeah, you can find a lot of information about that. And the cool thing is, like, obviously this score is very personalized because, like I said in the beginning, there are a lot of value investors out there. They all, or many of them, like John Templeton and Warren Buffett, they all have great returns on their investments, and they all follow the basic rules of buying a great company for at a good price. But still, the details differ. So maybe one investor thinks the net profit margin is very important, and the other thinks it's a bit less important. So that's why I created this system where, for example, return on equity has a weight of 6, because I think it's a fairly important measure in evaluating whether a company is a good company or not. However, if you think I don't need the return on equity in my strategy, you just give it a weight of 0 and it's removed from the calculation, and you see that the score also changes. So you can really personalize this scoring system to your own specific value investing strategy. So then the 3 intrinsic value models, they are all 3 calculated, and then an average is calculated for you, average of these 3. If you think the average is off because, for example, one intrinsic value estimate is way lower than the rest, you can also override it by typing in something here. If I type in, I think it's closer to 80, you see the figures change. Current share price is 40. The average intrinsic value estimate is 74. So it's 83% undervalued, and you could expect a return of 23% if you would purchase it at this price, according to these valuations. Don't pin me down on it, okay? Okay, let's just quickly go through the rest of the spreadsheet to see what it all does, but not before I have shown you how it actually works. This ticker symbol, if I fill in Microsoft, it takes a couple seconds to load all the data, and boom, there it is. You can see everything is recalculated. If I type in Apple here, it also takes a couple seconds. Boom, there is an analysis of Apple. And this is how it works. It's very simple. Dolby, maybe. See, very quick. Okay, so that's how it works. It's a very quick way to analyze stocks. That's what I promised in the beginning, right? So second tab, statements. It's actually what we just shown you. It's the income statement, balance sheet, and cash flow statement. It's automatically drawn in when you fill in the ticker symbol, and it's 4 years worth of data. Then there's the inputs tab. A lot of value investors would say 4 years of data is not enough to truly analyze a company. So what I did down here is I got 10 years worth of financial ratios. So these ratios is really, these ratios are also used in the calculations to determine whether a company is a good company or not. And you also see that here we get some extra info like the price, the earnings per share, current ratio, and all those figures we need in the rest of our spreadsheet for analysis. Jim asked me to explain the max purchase price on the dashboard. Let me show you where it is. It's right here. Yeah, so when you hover over it, I added some info to the spreadsheet so to help people out. Like if you hover over it, it says the maximum price you should pay to earn your desired return on investment as specified on the Inputs tab. So on the Inputs tab here, I have specified my desired return on investment is 20% annually. If I want to earn 20% on this stock, with the data we have, with the knowledge we have, I should never pay more than $23 for this stock. That's what it means. However, the current share price is 48. So if I buy now, I will never ever earn my desired return on investment. So I shouldn't buy. That's really what it is. If I change this, for example, to 10%, if I only want to earn 10%, it has changed to $35. You see? So now if you purchase below $35, you have a good chance of earning at maximum of 10% a year. So that's what that means. I hope that answers your question. You can also see other factors you can fill in here, like the margin of safety that you wish to apply in the calculations, the discount rate for the discounted cash flow, for example, and yeah, some other stuff, details. Analysis. The analysis tab is here to also help people who have not been investing for very long. So it's like a lot of websites you come across as an investor contain so much jargon. You might have no clue what the heck they're saying or what all these variable means. So what I did here is, for example, here the return on equity is analyzed. The value is 11, which is, in this case, the judgment about that is bad, because we would like the company to have at least a return on equity of 15%. So yeah, it then tells you that return on equity is low, the company does not invest its capital profitably. So it actually explains to you as well why it is bad. It doesn't just say, oh, this is good, Altman Z score is good, low risk of bankruptcy within the coming 2 years. So it really explains you, it gives you a bit more context. Let me see, some people are asking questions. Caleb, so is it like buying it at its margin of safety? Well, the margin of safety, how I applied it in the spreadsheet is that when I do a calculation of like the 3 valuation methods that are in here, I apply the margin, I calculate the value, and then I apply the margin of safety. So I subtract that. And then what is left is the conservative value, the intrinsic value. And yeah, the max purchase price is just, if based on the conservative value, at what price should you buy in order to still have a chance of earning your desired return on investment. How many stocks do you have to search before you find one at such a discount? A lot, especially at the moment, because there's, at this moment, the stock market has been going up for quite a while, and yeah, there's just not many stocks to find, to be honest. I've been looking very hard, and I had an extremely hard time to find any interesting stocks at the moment. So I'm very curious for the stock tickers you're gonna tell me to analyze in a couple minutes. Does the spreadsheet work for Indian stocks as well? Unfortunately, no. The problem is the data is coming from several data sources that only have data for American stocks. So that makes it very hard. So if I want to make one for India, I have to create a completely new one. You find completely new data sources and hope they have the same amount of data, because there's just a lot of info available for American stocks. So at the moment, no. Yeah, Hong Kong stocks won't work, Ming. I'm sorry. Same story as for the India. Yeah, only USA. That's true. You lost contact. Can you guys still hear me? Nilesh says he lost contact. Maybe try to. Let me just send him a little reply. Can you try to sign in again? Okay. Okay, cool. You guys can still hear me. That's. I'm glad to hear that. Okay, then one of the most exciting parts for me about this spreadsheet is this page. It's the graphs, the financial graphs. They show the several key metrics. You remember the 10 years of financial ratios I showed you. They are plotted here. So you see, for example, the earnings per share versus the free cash flow per share. So why did I plot these in one graph? That is because if a company reports consistently high net earnings, however, the free cash flow is a lot lower all the time, that means that those earnings are not sustainable, because you cannot, in the end, have more, earn more than you actually receive in money. So if it can happen for a year, maybe a couple, but if free cash flow is consistently below earnings per share, that's a warning sign. Return on equity is a very important one, so I put it at the top. Net profit margin, you see it's been declining. I put a little trend line in there. Same with the book value per share, which has been going up. Company has no debt. That's great. Current ratio is hovering around 4, which is really good. Shares outstanding have been declining, which means that the company has been buying back shares, which is at the right price, a smart thing to do, and good for you as a shareholder. and they started paying out some dividends starting in 2014. So it's a really visual way to quickly see how well a company is doing. Let me see. To help weed out companies, you can use Google Stock Picker. Yeah, the stock screener indeed I just showed you. It's great. I always use it. The spreadsheet, I'll tell you in the end of the presentation where you can get the spreadsheet, Mark. Is there historical price earnings? Let me quickly double check that. What we mainly use in the calculations is the PE, like in the PE valuation model here. We use the industry average price earnings ratio. Let me see in the. No, I don't have the PE ratio here. So yeah, that's the one. That's the one I use here. This is the price earnings valuation model. It's based. It's a fairly simple model. It's based on earnings per share with times the expected growth rate. We apply the margin of safety here, so we get a conservative growth rate. There's a decline rate, so as a company grows bigger, it cannot keep growing as quickly as it did in the past. So this growth declines with this rate, and there's a discount rate, and then we end up with a valuation. Then there's the discounted cash flow valuation model as well, which is familiar probably to a lot of you because it's a very common financial model, even though it's fairly complex. There's also some reverse discounted cash flow. And the final one, which is a bit less known, but it's valuation model based on return on equity. And yeah, so those are the three main valuation models. Let me see. Lokesh, if we suggest you the data source websites, will it be possible to alter the spreadsheets? Well, Lokesh, if you can send me those data sources for the Indian stock market, I can definitely have a look. I mean, I actually received quite a lot of requests also from Australia, from Canada, from Singapore, from Britain. So there are other countries who want to use the spreadsheet, but unfortunately right now it's just for the USA. For at least for US stocks. You can of course use it all around the world. Can we enter more than one symbol? What you can do, Peter, is you can just make a copy. You can do file, make a copy, and then you can open as many spreadsheets as you want, and you can fill in one ticker symbol in each of them if you want to have like one overview. There, unfortunately, it's not possible to fill in multiple stock tickers at the same time in the same spreadsheet. And Canadian stocks, no, it also doesn't work for Canadian stocks. Just US stocks at the moment. So then the final tab, we have arrived at the final one. It requires some explanation because most of these ratios and stuff are based on a book which I linked at the bottom here. I wrote a little blog about it. It's called let me see what it's called. Earnings Power. No, that's not true. It's called It's Earnings That Count by Hewitt Heiserman. Sorry, it was a while ago since I read that book, but it was a great book. And so these are strange names for things that are actually very common. So this is a different word for earnings per share. So we plot the earnings per share. Defensive profit is actually free cash flow. So we got this to see like what I just explained in the graph, like you compare the net earnings per share with free cash flow to see if the earnings are sustainable. Enterprising profit is a complex function, but in the end, if it's above 18%, it's good. If you want to know why, read the book or my blog. And then the debt repayment period is an interesting one because everyone always looks at the debt to equity ratio, but this actually measures how many years it takes to pay off all the debt with free cash flow. In this case, they have no debt, so it's all zero. Hewitt Heiserman, the person who wrote this book, is things are shutting down here. Can you guys still see it? I think I lost some screens. One sec. There we go. I'm sorry. I think I swiped my Apple mouse the wrong way. Lost my screen. Yeah. So Hewitt Heiseman, the author of the book It's Earnings That Count, he actually used these ratios to predict with a significant probability if a company would go bankrupt in the near future. So with these ratios, he was able to predict, in hindsight, obviously, that Enron would be in serious trouble. So that's very interesting. That's why I added them here. One of the more common methods to see if a company is likely to go bankrupt in the near future is the Altman Z score. It's an academic score. A professor came up with it, and yeah, it uses these variables to come up with a score. And if the score is above, let me see, 3, then it's a good sign. If it's below 1.8, there's a decent chance they will go bankrupt in the near future. So very interesting. That's why I call this the financial health tab. Let me see, were there some questions? Where do I get my return on equity info? Yeah, the info is coming from different sources, but for example, in this case, the return on equity is coming from Morningstar. These ratios are coming from Morningstar. And do we see whether the company is debt-free or not? Absolutely, because we have the debt-to-equity ratio right here, 10 years, and they're all 0. So you see they don't have any debt. Okay. If there are any questions, let me know. If not, you can start out with mentioning some ticker symbols, and I'll see if I can analyze them for you on the spot. Mark, I'll tell you where to get the spreadsheet at the end of the webinar. Let me just, on the other hand, I'll say it later. Okay, let me see. Mark says ESRX. I don't think I heard of this one yet. Express Scripts. Okay, it seems like there's not enough information. It's a small company apparently. It's 40. Is it 41 million or? I'm not entirely sure. Okay, it doesn't seem like there's enough information available for this stock. So let's move on to the next one. Okay, what do we have here? We see a score of 76. We see, for example, the return on equity is inconsistent. So let's see why. If we go to the graphs, we see return on equity. We're looking for a company that has consistently had a return on equity above 15. You see the last couple of years, it has been there, but before that, it had a bit of a dip. So that's why it says inconsistent, which means it's good now, but it wasn't as good all throughout. So the score is a bit lower. What else do we have? Accrual profit, unsustainable. That's interesting because that is what I just mentioned. You see that the blue line is the free cash flow. It has been under the earnings per share for 1, 2, 3, 4, 5, 6, 7 years out of the 10. So that's why it gives it a bad score. In the end, still 76 is a decent score. If we look at the intrinsic value calculations, it has an average valuation of $24. The current share price is $17. It's 43% undervalued. So this is potentially an interesting stock. So what I would do now is, okay, it's interesting. I put it on a list, and we'll analyze it more deeply later on, because this will give you a first glance, right? It will give you a quick overview, like, is this interesting to put more time in or not? Because if you just go, if you do a stock screener and you come up with 30 stocks and you have to manually analyze all 30 of them, you're going to have a bad day. However, if you run all 30 of them through the spreadsheet, you can do that in, 10 minutes, and you'll have a very good idea of which stocks are actually potentially great stocks. So let me see what else. Goldman Sachs. It's a bank stock, so it usually doesn't really work because their balance sheets are really complex. Yeah, so what you see, you get these crazy things where the valuations go so mental. It's almost impossible to analyze bank stocks because they don't even know what they're worth themselves. So let alone how do we know? That's why, yeah, a lot of value investors try to avoid that branch of stocks. Caleb says ADP. We got it here, automatic data processing, score of 61. Book value per share is bad. So let's see why. Go to the graphs. We see book value per share has been going down and down. That's a very bad sign. It means the company is definitely losing value, which is strange because the earnings per share have been going up and return on equity has been going up. Let's see, net profit margins dropping a bit. Shares. This is a interesting one, but I do see they took on some debt the last few years and the book value is going down. So I would be very cautious with this one. GSK. What do we got here? GlaxoSmithKline. Terrible, terrible score. Crazy valuations. Let's see what's happening here. Not a big spike this year, of this past year. Debt to equity is at 3. That is insane. Like usually a good debt to equity ratio is 0.5 or lower. This debt to equity ratio is 3, so it has 3 times more debt than equity. That's crazy. Maybe they use it for a good thing, but I'm always very wary of stocks like this. Current ratio is not that great. You prefer a current ratio of 2. This one is at 1.2, so not great. Dividends has been increasing though, except for the last year. Yeah, I'm not impressed. It's a big company, but I'm not impressed by its figures. Justo, CXO. Well, I see 2 negative valuations, so I'll just skip this one. It's not gonna be an interesting stock. PLX, biotherapeutics, biotechnology. Have these guys made a profit yet? Let's see. Inputs, net profit margin, minus. Nah. I wouldn't invest in this one if I were you. Amba. Nilesh says, don't you have 2016 data? Well, the data is coming from a data from for example, Google Finance and Morningstar. If they have the data is in the spreadsheet. Like the moment it's on those websites, it's in the spreadsheet. So if they apparently Google doesn't have the data yet, so we don't have the data yet. Some companies don't. Some companies don't. They have a different book year, so they don't necessarily disclose their financial figures like at January 1st. Like it might be a bit later on in the year. Let me see what else we got. Amba, semiconductor. They have some good things, definitely right here. Especially the financial health is great. Book value per share is bad and return on equity is bad. Let's again check out why. Net profit margin has been increasing. Shares outstanding has been increasing. That is also a sign that you have to watch out because it means that they have been giving out shares, which means if you are already a shareholder, your current share gets worth less and less because there's more and more shares to distribute the same value. So that's not good, but the current ratio has been going up, book value has been going up, return on equity has a very funky spike here. It does seem like a pretty good company. No debt, very interesting. Plus, what you see is that if you look at the average valuation here, you see they're pretty far apart, huh? So the average estimate is $100. So let's make that a bit lower because it's probably closer to to the 86. Let's make it $80 with the override field. What you then see is the current share price is $51. But even then, even though we lowered the average estimate, it's still undervalued 55% at the moment. And with my desired return on investment of 20, I have a max purchase price of $49. The share price is $51. So if I would buy it today, I would have a good chance of earning 20% a year. So yeah, I'm gonna write it down right here with the other ticker symbols and look at it some more later on, because this is a very interesting one. I'll do like 2 or 3 more, okay? Because we're almost nearing the end. Let me just see if I can do this one. Another biotechnology. Ooh. I'm not a big fan of biotechnology. It usually loses a crap ton of money before it has a small chance of actually making money. So it's not my cup of tea. Stay in your circle of competence is what Buffett would say, probably. This doesn't really have enough data available. Sintel. The heck's up with these ones? American Eagle Outfitters. I should probably reload the spreadsheet a bit because it's too many ticker symbols. Yeah, so you see how quickly it is to analyze all these stocks. I see we're almost running out of time, so let me just quickly go back to the actual presentation. Then I can tell you where you can actually get the spreadsheet. Yeah, so you already see it on the screen even before I've present. There we go. Whoops, I'm already revealing everything. Okay, so this is the value spreadsheet you just saw. The regular price is $297. You can check it out on the website. That's the price that I asked for this. What you get for it is the entire spreadsheet, including the 3 valuation models we shown. It's 100% unlocked, so you can do with it whatever you want. You can tweak every single function in it. You can if you're good with Excel and stuff, you can tweak the functions I use to calculate everything. It has the built-in fundamental analysis, which explains all the analyses that are performed. It comes with all the financial graphs, free updates for life. So if I ever come with new features, or if something breaks down, I'll fix it, and you don't have to pay any extra. And you always get email support from me. Yeah, so the regular price is $297, and this is a one-off payment. So it's not a subscription model. You don't have to pay anything else ever again. It's just this price. However, because you've been part of this webinar, I have a special offer, $100 off for lifetime access. So again, you don't pay anything else. This is the only thing you pay. To get it, go to valuespreadsheet.com/big-deal in capitals. I'll also show it on, if everything goes well, you should see the offer pop up on the side of your screen now as well. So yeah, valuespreadsheet.com/big-deal, and it's valid for 72 hours only. After that, the price goes back up to $297, which is still a decent price, especially if you compare it to other financial products online. You easily pay this per year for many financial products, but not for this one. You just pay it once and you get lifetime access. So let me just quickly show you what happens when you go to valuespreadsheet.com/big-deal. Let me just type it out for you as well, so you can value spreadsheet. Boom. Big deal. Boom. And yeah, let me just open the page for you so I can show you what happens then. Exit out of this one. Big deal. Okay, so you come to this page, you see there's an expiration time. That's until when the offer is valid. A little description of me. You can watch another short video if you want about what the spreadsheet is and how it works. What you get, well, all the stuff I already explained. You can read some reviews from actual people that are using the spreadsheet at the moment. Some frequently asked questions, but it would be silly if you wouldn't just ask me right now because I'm here. And then you can see that down here the price was $2.97. It's now $1.97. You just fill in all these details, just your name, your email address. Make sure it's a Google email address. Because it works with Google Spreadsheets, so we use that to verify if you're actually logged in and you have a paid account. Fill in a password, and that's about it. You just click the big green button and you're good to go. So that's about it. Let me just quickly go back here to say some final words. Yeah, so this spreadsheet that I built, I told you how I created it because I was frustrated. I came across all these financial websites. I had to fill in all this financial information into all my spreadsheets. I combined it into this powerful tool and fully automated it. So with this, you can literally analyze stocks in seconds, like I just showed you. And yeah, it just saves you a tremendous amount of time. And even if it makes you buy one good stock or prevent you from buying a terrible stock, it would already be definitely worth the price. So it's not a lot of money. It's not a subscription model. So one-off, $100 off. So don't miss out. Available for 72 hours. I use this myself. I didn't build this as a product. I built this tool to use myself. Like whenever I analyzed a stock, it took me way too much time. There are so many stocks out there. So to find the gems, you need to analyze a lot of them. And to analyze a lot of stocks takes a tremendous amount of time. And this really helps to cut down the time you need because you have an instant view of, okay, this is interesting, or no, this is terrible. It will never go anywhere. Will you be updating it in the future? Well, yeah, obviously, like if you guys come with feedback and say like, oh, I really missed this feature, I wish you could do this and this, I will definitely add it and keep updating. And whenever it breaks down because one of the data sources changes or whatever, I'll keep updating it and make sure it stays running. And yeah, Lokesh, as I said before, it doesn't work for the Indian market. What you could do is try to tweak it yourself, or wait until I have created an Indian version, but this version doesn't work for the Indian market. It's pretty tricky to make it work for other countries. So at the moment, that's not it's not a priority at the moment for me. So it will probably take a while before other markets will be supported. But it works perfect for American stocks, and because there's a lot of information available, which also makes it hard, because if you have a lot of data, then it's also very easy to get lost in the data. And hopefully this spreadsheet will make minimize the amount of data you have to look at, because you can really just look at how good is the score and what is the intrinsic value. Those two factors, if you look at those two factors and those are the only things you look at, you'll already do pretty well on the stock market. Ed, after purchasing, I'm always available. You can always send me an email, and I usually answer within 24 hours for sure, but usually quicker. So yeah, I'm always available if you have questions. Can you create it in a way, get a ranking? Well, Volker, I have looked into that. I have looked into creating a tool that just runs all the available stocks through the spreadsheet and then ranks them. It was called Value Scout. There is still some information about it on my blog. But I discontinued it because there were several websites that did that pretty well already, among which the Jitta.com website that I showed you before. So they already do a decent job at that. So yeah, guys, I wanna if you have any questions for me, please ask them now. Otherwise, I wanna wrap it up and thank you for your time. And yeah, just keep in mind it's only available for 72 hours. And if you have any questions after this webinar and you think like, oh, I should have asked him, feel free to answer me or to send me an email at nick@valuespreadsheet.com. You can always send me an email and I'll answer you straight away. So let's see. Gio asks, are you also using options? I did write an article about that on the Value Spreadsheet blog. Because as a value investor, it could be very interesting to use options actually, because it allows you to lower your purchase price. It's a very tricky system, so I can't explain it right now, but you can find it on the Value Spreadsheet blog. If you search for options, you will definitely find it. Okay, guys, thank you so much for being here. Thank you for taking the time. I always really appreciate it. We had a lot of people here today. Yeah, and I just really hope you learned a thing or two. And yeah, I wish you a great day.